Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, December 16th, 2015. So the Fed decision is behind us. Actually, it's the reason why I didn't put out the video last night. Normally, I put them out on Tuesdays. But we had a lot of, whipsawing back and forth. But in the end, the Bulls won that battle, and it was expected because we had 1%. Bullish reading on Monday, and that was the day that we were actually looking for the low. So the last time I did the video, that was on December 8th, and I said, expect a pretty sharp decline, and it was because of the high sentiment readings that we had and just the pattern that was in place, and we saw what happened from there. We had a really big drop, and where it found support, everything made sense, and I'll go over all of that in tonight's video. So with that, let's get started because I have a lot to go over here. So at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always an irrational element at work, and that's what creates market opportunities. And we find these market opportunities through Woody Dorsey's proprietary sentiment database, as well as his technical turning dates, and that's what tells us when to expect either strength or weakness in the market. So a big part of what we do, it's not a matter of being exactly right on these dates. It's really letting members know, is it safe to be buying, shorting, or holding? And a big part of that has to do with how they're feeling about the market. And these are sentiment readings. And if you notice, it's whenever you have high sentiment readings, it doesn't always mean it's a short. It just means don't get overly bullish on the market because everybody's with you. And usually when we get these very low sentiment readings, it means don't jump on the short side. And typically that means you're going against what the mainstream media is telling you, because they're usually getting bearish at the exact lows and bullish at the exact highs. And if you notice, it works just like an oscillator. And the minute that we have over bullish readings here, we usually get the drops, and we get, when everybody's bearish, we get these rallies. So I had mentioned, we had a 91% bullish reading. I was anticipating a drop, and we got it. And on Monday, with the big drop, we sent out an alert that we had a 1% bullish reading, and now we have the S&P that's up some 90 points from that low. So just knowing where people, where investors are thinking, it gives you the trading advantage. And I've mentioned this before. It's like playing Texas Hold'em with five guys and being able to look at their cards, because you know how they're feeling, and you don't want to be jumping on the bandwagon when Woody's investor sentiment data is kicking off that everybody is bullish. So on December 4th, we sent out an update just saying that sentiment on 12/2, which was the Friday, was 93% bullish, and it's generally not a good idea to buy on high sentiment. And on the 14th, which was Monday before the market opened, we had mentioned that to the 14th, sentiment was 1% bullish, thus it may not be a good time to sell. So here was the 14th. This was the 93% bullish reading. From there, we dropped about 100 points. And on the 14th, we had the 1% bullish reading, and from there, we've rallied almost 90 points. So you can see when everybody jumps on one side of the say sentiment bandwagon, and everybody is thinking the same way, the opposite takes place. And everybody, I can tell you right now, going all the way into today, was giving up on the Santa rally. They were, short rallies, that Santa's not coming. And even though we had the Fed decision, nobody was going to be jumping long. And now what happens now? We're all the way back up at these highs, and now everyone's getting bullish again. So what is the market going to do? It's probably going to make them chase and jump in, and the minute everybody gets bullish, we're going to see another drop like this. So again, it's more a matter of, is it safe to be buying, or should you be shorting, or just staying neutral? That's really the biggest aspect of the newsletter and what we do. And we do that through looking at time, and those are the actual the turn dates that Woody that gives us well in advance, and then we track that with sentiment, and then price and technicals to figure out where where we may find some type of reversal. And it's really been working well, because when you see the euphoria, or you see the capitulation, it's been perfect times to buy, and I showed you that with these. When everybody's bearish, it's when you want to be buying, and it doesn't have to be at exact lows on it like we saw here. So again, the whole really method is when you see the euphoria, you don't want to be jumping long. When you see capitulation, you don't want to be shorting. You want to be trying to look at the opposite side. So our current sentiment reading, like I said, was 1%. We're still kind of in this channel type thing, but the 93, 90, and 91% was telling you don't get overly bullish here, as everyone was looking for the Santa rally. And as everybody gave up on Santa, now we're rallying back up again. So we had a low sentiment. Tomorrow we'll get our other sentiment data out, and we'll have a pretty good idea as far as how everyone is thinking. But on the 14th, you can see now that we knew the time was the 14th as far as the turn. We had the low sentiment, and we stopped at a 50% retracement. So you do see how combining these three together got you long the markets, and I did, and I've showed you some of these before. My how this is the trades I've been doing since December 1st, and I don't make big trades. I've said that usually a maximum is 1,700, 2,200. But I'm up 2,900 right now, and I still have an open trade that I left right through the Fed meeting that's on the long side. I closed this one yesterday, and I opened it on Friday, and then what I did is just closed it on the 15th, and it was $900. So I didn't have a whole lot of stress going into the Fed meeting, and plus I knew we were in a bullish time period as far as with the markets. So right now, like I said, we had where it bounced, it made sense. We're now rallying on a 60-minute chart. Keep an eye on the 2080 level. If it pops through, we could see a move to the 2095. These yellow here, this is an inverted head and shoulders. I believe if we come up here, or we could pull back from here. It doesn't really make a difference. But from one of these levels, a pullback down to these levels to form the right shoulder, and then most likely they'll try higher. Now the thing is that this inverted head and shoulders is going at it's at the wrong end of the tape, because if you notice we're still at the top end of the chart here. So an inverted head and shoulders is just a sucker for the bulls to jump in, thinking that the S&P is going to 2,200. And the thing is that we already know. So going back on the 19th of November, we knew that we were looking for weakness into the 7th or the 10th. So that's been this has been all the way since November 19th. Now the reason why I'm saying be a little careful on the long side is we already know when the top is coming. So again, knowing where and when to expect these turns, all we do is map out where price will reverse, and we have a little time. But notice this is the 14th. This has been here for well over 3 weeks as far as where the strength could go, and we know when to expect a top, just like we knew that we were expecting weakness into these dates going all the way back to November 19th. So knowing this stuff, you control your emotions. Seeing where everybody is as far as from sentiment gives you that insider track as far as where to position yourself. And then from there, all you do is position your trades, and they're, it's not in and out day trades. I don't want to do that. I want nothing to do with it. I just want to make trades and know that, okay, we're going to be safe as long as it stays above here into this time period, and as long as sentiment doesn't get to extremes. And if sentiment gets to extremes, we get that heads up ahead of everyone else, and we just close the positions, or I close them. This, Woody doesn't make these trades on it. But anyway, if you're looking to trade with confidence, not jumping in and out of the market, worrying about what the Fed is doing, what the algorithms are doing, using a trade secret that nobody uses, only institutions know what Woody does, and that's based off of sentiment and these technical timing dates, and he's been doing it for well over 30 years. Feel free to join. I can just show you what we do each week in these videos. I can't give you all the information, but hopefully, we've proven, what we can and can't do, because nobody else, on the web can do the information. And again, I've been showing you my trades. I'm still giving free memberships to MarketsPath as long as you stay a member of Sentiment Timing. And with that, enjoy the rest of your week, and I'll talk to you guys next week.